Hi everyone, this is Sana and Mona Ali here from the Property Twins. This video is for you if you are buying your first home or even if you're looking to refinance your home at this point in time.
Yep. So we talk to people with existing loan structures and people who are looking to buy their home, and often the consideration ends up being the low rate. However, we wanted to share with you 4 things that are really important for you to ask yourself when you are buying your home or looking to refinance your home, especially if you have long-term aspirations. The first is it going to be your long-term family home? And are you going to make this an investment property, if it's not going to be a long-term home? And if you are going to make an investment property, and it is a stepping stone towards your next purchase, how much deposit should you be putting in? How much LMI should you be paying for that property?
Or even, if you do have a large deposit, how should you be structuring it so you can move from that first home to future investment properties?
Yep. And the fourth point is, if it will become your investment property in the long term, then obviously what is the consideration around tax implications? How should you be putting the money in the loan? Should you be using offset accounts, redraw accounts? What should you be doing? What's the most effective way of moving forward?
Yeah, and to bring you closer to your goals. So most people don't really take into account their long-term goals and visions when they do select a lender and a loan setup. So you may buy a home now, and even if you don't pay LMI, choosing the wrong bank and the wrong loan setup could cost you. And that's equally applicable to refinances as well, because I've been working with a client who refinanced their home about 12 months ago. They topped up some equity at that point in time because the intention was to use that equity for an investment property. Right now, they're ready to pull the trigger and buy that investment property. But what we've realized is, the lender that they are with at this point in time does not have any flexibility for them to be able to use their cash savings tax effectively. And we've done a few valuations to see if there's potential for them to move to a bank which will allow them that flexibility moving forward and help them create wealth through investing, whether it be in future properties or in other share markets or stocks and bonds, etc. So 12 months ago, their valuation came back $100,000 higher. And today, it's come back 100,000 lower than what it did, and they topped up the equity based on that valuation last year. So what that means for them is that they're going to continue with that particular lender for quite a long time, especially in Sydney and Melbourne markets. That's a key thing. It would apply to any market regardless. Valuation's always a risk. But what it means is that because we can't make changes to their home loan in terms of the structuring, tax effectiveness of the loan, that means they pretty much have to pull money out of the offset account and use towards other investment properties or the investment
unfortunately
vehicles.
That has big tax implications if you're not with the right lender. And with our clients, lender selection is paramount, and when you're selecting the lender, you have the flexibility to make sure the funds are tax effective. So obviously we don't want to get into the intricacies of the setup.
Then I guess the key takeaway has been, having the right lender up front is key. If building wealth through, whether it be through property or other asset classes, is important to you, because we could really use your money effectively. That you have. So very important. It goes way beyond just looking for that lowest rate. Lowest rate may be okay at this point in time, but if valuations don't stack up 12 months later, you'd pretty much be stuck there and you won't be able to move then.
So people, it's important to think about the long-term lending strategy, not just for your home, but beyond that. Even if you're not thinking about investing right now, but you might be in 3 years when you have different responsibilities or different circumstances. And also people end up being with loan setups, which take them longer to pay off just because of how they've set it up. Second, have major tax implications. And third is reduction in possibilities around what really can be done with investing.
So it could make or break your investing journey
or your wealth creation journey.
Wealth creation journey, because we are in a phase in the Sydney market where it may go sideways for some time. Or it may go backwards a little bit over time, depending on where where we are at and what areas you're buying, what you're doing. And by no means, you shouldn't be buying your home. Go for it. But just keep in mind that if you do want to invest when the time comes, if you are with the wrong lender, you may not be able to move forward relatively easily, effectively, and tax effectively, really.
Yep. And also make sure you are considering fixing rates versus variable rates. That is another important consideration, whether it's your home
or investment. So obviously there's a lot of other factors, but we go through those in quite a lot of detail with our clients when selecting banks for their home loans or refinances. So if that's something that you're looking for, then just feel free to reach out to us via direct messenger.
Let's chat if you are looking for that home or refinancing and wanting effective structures. Send us a message. We'll chat soon.
Have a good evening.
Thanks, guys. Bye.
Bye.